Hello guys, so today I want to do this content in 4 languages. It's already some time I don't do this content in 4 languages. For now I will do it in English version, after Portuguese version, after with my limitations, but in French and also in Spanish. So today I want to share with you, let's find out if X it's a scam or not. So first thing people usually say, it's that X needs constantly new investors to this project to be viable, or to the price goes up. And I would let's say how can I say this, I will my argument will be, well, which crypto needs new customers or new investors, or even any business or any investment which doesn't need new customers or new investors to to be continuing working, or being the price going up if it's an investment. If it's a business, of course you need to have customers. If you don't have customers, you don't have a business. It doesn't work like that. Okay, so I think that question that people sometimes they say, yes. Also, some people will say that because X auto denominates as like a certificate of deposit on the blockchain, that it's not true, and it's banks, when you deposit with them, they take that money and then lend out, which is not, by the way, accurate. Banks, when they receive your deposits, it's not like an asset for them, it's like a liability for them, because they just don't lend that money, by the way, that their customers deposit with them, to new customers. They just use that reserve or guarantee as an excuse to go to the Federal Reserve in the United States or central banks in other countries, to have cheap money, newly mint, cheap, fresh money. And then that money that they come from the central banks or the Fed, it's the one that's lent out to another customers. So basically, yes, when you deposit your X with on the smart contract, let's say, on the when you stake it, so basically what will happen, it's locked, your X, correct, but it's by inflation, by minting new X, that your interest comes from. So it's not a corporation, it's not a bank, not a financial institution that is behind to give you new X, it's the protocol that it will inflate. And people, they say, oh, but that's very weird thing. Really? What does other proof of work systems? They inflate to pay miners for providing security. I know this because back in 2016 I was a miner for Ethereum, for Monero, for Litecoin, for Ravencoin. I don't even remember how much coins, how many cryptocurrencies did I mine back then. But what I did just was this: I bought mining hardware, a lot of GPUs, graphic processor units, those graphic cards that used to very powerful to for example to play games. And by providing security to the network for allowing transactions on the blockchain, I was rewarded with new minted myself new coins, new tokens. If it was Ethereum or Monero, doesn't matter, depending which cryptocurrency I was mining. So this is the same. Instead, you buy hardware equipment, mining hardware equipment in X. You will buy the token, you will lock it for a certain time, minimum 1 day, maximum 5,555 days, which is around 15 years, and new tokens will be minted. And people will say, oh, but like that forever minting, it's not a good system. Really? Yes, that's true. For example, BTC, Bitcoin, they have a cap, a 21 million cap. Well, if the miners, when it arrives that year, 2150, I think, 2150, it will be the last Bitcoin mined. If they don't respect that software feature that was on the protocol, maybe they can bypass it and continue mining bitcoins. But that's a problem for the future. I think I will not be alive in the year 2150, because currently we are just on 2022. So it's more than 100 years in upfront. But I mean, it's yeah, Bitcoin has a limit of 21 million, but for example, Ethereum doesn't have any limit. It continues every 13, 14, 12 seconds on average, being minted. I think now currently the rate it's 2 Ether per every block, so every 13 seconds average. So, and it will be forever like that until they changed their protocol. They went to to go to Ethereum 2.0, but back then 2016 when I started mining Ethereum I heard about the Ethereum 2.0 and it still doesn't exist. So yeah, they will switch from proof of work to proof of stake. But the thing that I want to say to you is, yes, X means new X, so by that definition can be also a Ponzi scheme, because a Ponzi scheme, it's like if you remember Madoff, what he did, it was recruiting new money from new investors, and he will pay the old investors. X is not like that. X, when you lock your X, it's the contract that will create new freshly minted X. So it's like yourself, by running that code, you're paying to yourself. So it's not someone X, it's coming from someone else to yourself. So it will be so does get is not on the category of a Ponzi scheme. And also because the X it's paid, it's in X terms. So the interest that X pays, it's in X terms, not in fiat, not in dollars or euros or pounds or yens. It's in only in X terms. Then the market, the free open markets, will decide the price, goes up, goes down. And by the way, people that became very wealthy with X, they didn't even stake, most of them. They just, in a period of 2 years, yes, we have the bull run, it helped. The X price went up less than 2 years, 10,000 X, which means 1,000,000% up. So it's very interesting. So very, very interesting how the price, now we are in a bear market. It's normal. The price went down, but because everything went down, crypto, stocks, real estate, everything is going down. It's normal. But on the next bull market, the price, we'll see how much higher it will go, the X price. Also, some people say that yes, you need to have like I already mentioned, new investors, new customers, let's say, new token holders, or new X buyers. But I think that is true for every industry. If you go to the real estate market, yeah, the prices of houses when they go up, or the stocks when they go up, or crypto in general when they go up, yeah, there is someone after you bought that one that will pay two. It's called the greater fool thing. So yes, that's true, not just for X, not just for crypto, not just for stock, not just for everything. You need to have someone that will pay higher price, that evaluates or speculates that the price worth more, to pay someone that paid less. But this is true for every, even on traditional business. You have the producer will sell you the potatoes for maybe 10 cents a kilo. Then you have the warehouse will buy it for 10 cents from the producer. They will sell it for the reseller, at 40 cents. And then it will be at 80 cents for the end consumer. Everything is like that. So we can call it not a Ponzi scheme, but a pyramid now. Yes, it's true. Everything is a pyramid. So when you say, yeah, it's a pyramid. No, because a pyramid, you need to sell a product, and you have several layers of people earning commissions. So X is not that, because when you buy and you sell, there is no one, besides you as a seller and the buyer, or you as the buyer or the seller, that are in the on that process. So it's not multi-level marketing or network marketing, because you don't have it's not a pyramid. And by the way, people that sometimes they think network marketing or multi-level marketing or pyramid systems, yes, it's a legal business. It's honest and legal and very profitable business. You need to also check that as well, because with usually around $500 you can open a business, and you can have a lot of potential, no limit on that income. So I'll also advise that business and X in general. Okay guys, I hope that this information helped you, and see you in the next video. Bye for now.